Hey guys, welcome back to the channel. I hope everyone will have a good trading and investing week. So I think I wanted to make this video just to kind of maybe balance out some of the really FOMO-ish Roundhill videos that have been coming out lately. Because I actually do like them. So far they've been performing well, but any ETF can get messed up just because if there's too many people crowding in. Eventually your distributions and your stock price could suffer. So I wanted to do something that's more realistic. Just as a matter of disclosure, I still have my high yield allocation. I'm not loyal to any one ETF issuer, and I've come to the conclusion that it's best to kind of do it yourself, or at least in my case, I've started to do more of this, do more of the heavy lifting myself. Originally, I wanted to outsource some of my own trading investment to some of these ETFs, but you know what? If you want to do something right, you got to do it yourself. So you know, you know, I really hope Roundhill does well, just so that just because there's so many people that are interested. I just hope that people will kind of pace themselves and not kind of ruin like another ETF issuer that are engaged in cover call ETFs. So let's hope for the best. So let's take a step back and look at like the U.S. median household income, because not everyone is like a ultra high net worth individual bragging from the yacht that's moored in like the tax shelter island. So I wanted to bring like this income amount. This is based off of the U.S. Census from 2022 that was published in 2023. So there's going to be a link to it, to the study, the survey in the description below. So according to this, real median household income was 74,580 in 2022, 2.3% decline from 2021 estimate of 76,330. So I'm hoping in 2024, like the number will get bumped up a bit, just for everybody's sake. So let's just assume like a target of $75,000 a year. I think that's pretty reasonable assumption. So then then we have to ask the next question, like how many shares would you need to replicate so-called normal median income, at least in the US. So I pulled up like some data from QDTE, just to use that as a baseline so far, just because I don't want people to get too excited and just like pile in at the wrong times. So I did like the high point, the average, and the low point. So if we talk about the high point, we're talking about 57 cents per share, or 29,057 annually. Or another way to look at it, that's a annualized yield of 71%. 30. We want to talk about average, you talk about 32 cents per share, or 16,061 cents annually, or 40%. And then at the low point, it's 9 cents or 469 a year, or 11%. So right off the bat, I'm just going to disqualify the high point just for myself, because no ETF, no fund, no hedge fund can return 71% consistently year over year. And even on average, 40% is fairly high. So I wanted to use these three confidence levels and then kind of like give you my own opinion, or like what would Panda do. So the first one, as I said, like I'm gonna disqualify just because it's very hopium. So if you want like $75,000 a year, that means you would need a starting base of $105,287. And again, I'm gonna put it out there that it's not realistic for most people, and even like for the normie level. So if you go back and you say, oh well, I think QDTE will return 40% a year. Again, I don't think that's realistic either. But in case you're interested, you would need a starting capital of 187,451 just to get that $75,000 income per year. And then I'm also adding like as the last level, like the curmudgeon level. So like if you're assuming 11% a year, that means you're gonna get that you would need $663,131 as a starting base to achieve that $75,000 a year. Now for my own budgeting, Like I would use like somewhere between 15 to 20% returns. But that's again, even that's like a pretty like high bar, but it's more realistic for most people, because even 15 to 20% per year, like you're doing, above average. So if you're interested in that, you would need somewhere between, let's say you're going for 15%, you'll need 500, half a million as a starting base. But if you think you can achieve 20%, and that's always a good goal in life, but again, that's gonna require some work. Then you need like a starting base of $375,000. Now, some of you might be upset because, well, how am I gonna get all that money and blah blah blah. Look, some of you have pretty good jobs, and especially if like let's say you're in the tech sector or maybe like the finance sector. So like I'm not gonna be able to make everybody happy. Some say, well, oh, that's too easy, and then another, other people are gonna say, oh, that's too much, and blah blah blah. But I'd rather people oversave rather than undersave. Because I know some people are going to be, well, I need that much. But remember, I like to be conservative, especially as I get older and like my trading abilities will start to go down. So I have to budget for bad stuff to happen. Let's say, like for example, like right now, we're probably in a recession, and sometimes like over the course of like a bull market, like in 2024, you've noticed that we have like extended periods of low volatility, and that explains why like sometimes like even for Roundhill like the returns have been kind of lumpy, and then of course like you always have to account for inflation, because I don't know about you, my costs aren't going down that fast. And then of course like lastly, like you're gonna have like hordes of hungry tourists. So like I've definitely noticed like a migration from people that were formerly interested in yield max and Defiance and other ETF issuers. Roundhill seems to be like the hot topic for now until like the next wave of cover call ETFs come out. So just I just want people to be more conservative with their estimates. But again, that's just my opinion and my take on it. Not everyone is going to even achieve like 15 to 20% annual returns over like a minimum of 5 year period. It's going to get more challenging, over like the next 10 years. So that's just my take. But again, if you think like let's just go back to some of the estimates here. So somewhere between like 375 to 663 at first, that seems like a daunting amount. But again, you're gonna have to like suffer in the beginning and tough it out when you're young, because it's not gonna get easier when you get older. So you know I think there's still gonna be like this will still end up as a really good 2024. I don't want people get shaken out. I can't wait to see how this all plays out. I think Roundhill so far has been doing a good job, but again, no ETF issuer is going to be perfect. There's going to be some bumps on the road, so hopefully this is helpful for some people. Please, as always, please stay on top of your investments and your hedges. Also, please, if you can like and subscribe, that would be greatly appreciated. Hope people make some money out there, and I'll see you in the next video. Bye now.